We are on our way to Merchants Madness, our lenders employee event. They asked me to be on a panel with a few other multifamily folks, a big broker in town, a CEO who's in the affordable space, and then us being the market rate buyers. Asked me to be on the panel. Pretty excited to go there and meet the whole Merchants Capital team, talk multifamily. Always great to hang out with our lender, who is our biggest investor. That's what we're doing.
Here today at the Merchants Madness, our annual conference.
Yeah.
We do this every year with all employees across the country.
How many employees are here today?
250 now.
All right.
About half outside of Indiana. We have about 60 remote. We've got offices now in New York, DC, Chicago, in Minneapolis.
You guys have really expanded the last couple of years.
Yeah, still doing the same thing that we've been doing.
Do you still drive clients up to Chicago and introduce them to HUD like you did for me? Was
that's
that 10 years ago?
I think it was. I was just thinking about that today for our panelists, how long ago and how many deals ago. But it was about 10 years. We talked about this today. I think being able to grow alongside our clients is why we do what we do. And seeing your success and your growth and know we have a small part of that is really just heartwarming. We love it.
Well, it's been a lot of fun, and thanks for having me, man. I'm looking forward to this.
Absolutely.
Saying floating rate debt is bad is like saying a hammer or a screwdriver is bad, right? It's a tool. I can take that tool and I can build something with it, or I can hit myself over the head. In its essence, it's a tool. And thanks to you guys, we've been able to use that tool very effectively. The other side of your question, Midwest is doing exactly what it's supposed to be doing right now in these types of times, and even a little bit better, Steve, than we thought it might. We track rent growth, lease trade outs, renewals every week, and here in Indianapolis, Des Moines, Iowa, we made a big bet there. We're still seeing 5, 6, 7, 8, in some cases 9 or 10% rent growth, because our affordability is so much lower than the mean compared to the rest of the country. So at about $500 million in debt, I owe Mike more than any other investor. This is our biggest investor, our biggest partner, and I'm honored to be here today to be on the panel.